Why is Bitcoin stable even after the war in Iran? We reached the bottom.
Interesting question, right? This could be a potential explanation. If the market does not react to negative news, does it mean that all pessimism has already been priced in and that we can only go up from here? That's actually quite good reasoning, because very often the markets just trade within psychological ranges, right? When we are below the realized price, for example, we tend to see less selling pressure. When we are way above the realized price, we tend to see more selling pressure. And so different news get priced into the market to different magnitudes based on where currently our valuations are. If currently valuations are already very low and we get negative news, we might see less of a drop. If currently valuations are very high and we get positive news, we might see less of an appreciation. And so this is actually sound reasoning. I simply think that maybe the war in Iran that we currently see might end relatively quickly. It doesn't seem like the government will stay in charge for long. We've already seen how the leader got killed. So maybe this will go on for a while, we don't know, right? The Iraq war also went on for a long time. This might have impact on inflation. But even if that's happening, right? Even if we see a lot of money printing, as long as the US dollar still has its demand, as long as debt to GDP doesn't rise too much, we should at least see, measured in US dollars, many assets going up. Of course, gold would appreciate most with more inflation, but valuations don't necessarily come down. The only bearish scenario we could see is when the war extends that much that suddenly global supply chains get interrupted. That maybe GPU manufacturing from Taipei, right, from Taiwan, can't get shipped anymore to the US. If there are some kind of those kind of limits and the AI stocks are coming down because global chip manufacturing is in trouble, that of course would be an issue. But I think given the development in the last 24 hours or so, I'm not a geopolitical expert, right? I'm not trading based on this. But my impression is also, given how the market has reacted, that the Iran war is probably not going to spread way beyond where it currently is at the current stage. It will probably be contained to a degree. And so all we might see is just a bit more inflation, but probably no global crisis. So we can be very lucky. That's all that's going on.
Do look at altcoin fundamentals still matter? I'm looking at a locker in Solana that is currently working in testnet. We can apparently deploy competitive futures market for any Solana token.
I think the correlation within a market is too strong. I don't think that a particular asset just measured in US dollars will outperform if the market itself is going down. Could there be some short-term excitement around something? Yes, potentially. Could it potentially reach a cascading effect of shorts getting liquidated? Maybe the token went down over the last months and people were betting on falling prices. Could we see a liquidation of shorts and thus even a reinforced bull? Potentially, but I think the odds are against us. And so that's fundamentally what I always think about. I want to have the odds in my favor. Every trade is just a game of probabilities, and I want to estimate what are the kinds of probabilities. If I look at the altcoin market, when I look at this here, right? The performance of the smaller altcoins in the last month, everything went down, almost everything, right? We've got Boson that went up. If you look at the last year, pretty much everything went down except GP and Aura. If we look at even more tokens, let's say we look at all the tokens that are listed on Binance. Check this out. This is the performance of the altcoins, of all the altcoins that are listed on Binance. And what are your odds here to make money analyzing fundamentals of small altcoins? The odds are incredibly against you. And even the things that are going up, they don't necessarily need to go up because of fundamentals. This year, for example, that's just PEXG. That's just a gold token. You've got sometimes these rallies just because of short squeezes, but often enough, those short squeezes also deflate in the course of 1 year. So really, do you want to find the 1 or 2 winners to make 400 or 500% in the best case? And are you okay with potentially instead buying other tokens that are going down 90%, 80%, 70%. If you've got a diversified portfolio here, right? If you've got a portfolio of, say, 5 altcoins where you made your analysis on and you think they all have great fundamentals, you buy 5 altcoins, you're not going to pick the 5 winners, right? You might be able to pick one of the winners. If you pick one of the winners and 4 of them are losers, and then you're already way above what the odds here are giving us. But let's say you picked Zcash, right? You made your 5x on one investment, but you lost 90%, almost everything, on your other 4 investments. Your portfolio is flat. You didn't make anything. Your portfolio is flat. You already beat the odds massively by picking one winner out of the sea of losers, and still, just by diversifying with 5 different assets, which is not much diversification at all, still you would just be break even. And so that's why taking care of the general market structure is so important. Figuring out what the market structure is doing. Why should we try to play a game that's against us? Why don't we do the exact opposite? If the vast majority of altcoins underperforms Bitcoin, why don't we just bet on those tokens going down? And we know the reason why they underperform. It's not just because sentiment is bad. It's because the early investors, the venture capitalists, they sell. It's because the team sells. It's because users of the platform itself might also sell the token, right? If you use a platform and the platform has an incentive program and gives you certain tokens in order to use the decentralized finance application, if you get new tokens and you sell those tokens, at some point you take profit. That also is selling pressure. That's also increasing supply. So everybody gets new supply, and so the token tends to underperform. And it's not just theory. We also see this in practice. So that's how I think about this. Don't overcomplicate things. Make things running in your favor. That's my big message here that you will probably not hear on many other channels.
Gerhard, do you have an edge in each of the asset classes in which you are invested?
The answer is no, I do not. I have an edge in crypto, that's pretty clear. I can also show my data. Maybe in the next live stream I can prepare this. But yeah, I outperform buying and holding Bitcoin quite consistently over the last 5 years. It has even accelerated in the last few months because with the crash we made some money. But I do not try to beat every asset class. I try to just be invested in every asset class to take advantage of this diversification effect here, right? I want to be invested in different things, that I can rebalance portfolio weights, that I can buy crypto very cheap when I do see it as cheap. But having an edge in a market, I believe, means that you can beat the benchmark, that you are top of market participants, ideally top 10%, maybe even better than that. The higher you are, right, in the pecking order, the more you make. So I don't try to beat other asset classes because I don't think that if I do part-time precious metals trading, that I will be better than the person that does it full-time. And so it's the same, let's say, in business, right? If you have 10 different businesses, it's unlikely that any of those businesses will take off. It makes sense that even if it's like after a while, right? If you make business A, business B, business C, if you try different business models, that you at some point focus on one business model and make this thing compound and get better over time. The compounding will probably be much stronger compared to having the attention split across different businesses. And it's the same with trading, right? If we have an edge, it's very competitive. We want to have our edge specialized in one market because that's then where we can get the real outperformance, where then our alpha is strong enough relative to buying and holding, where it's actually worth it. And yeah, owning other asset classes makes sense. For diversification, trying to beat other asset classes, I think, is hard. Like, it's better just to focus on one asset class and pull out most value as possible. This clip was just a tiny moment out of a much longer value-packed video. To watch the entire episode, just press over here. Take your time. Looking very much forward to seeing you on the other side. Just press over here. Cheers.